This company has thousands of properties owned, a superb occupancy record for its properties, and an unrivaled streak of paying consistent and increasing dividends. I can tell you, unequivocally, this is the best real estate company in the world. Don't take my word for it though. Let me prove it to you. The spotlight for today's video is on the Realty Income Corporation, ticker symbol O. They're in the real estate sector of the economy and have been raising their dividend now every single year for 29 consecutive years. This is the best real estate company in the world. Let's take a look at the business and understand why. The origin story for Realty Income goes back to 1969 when the founders of the company, William and Joan Clark, acquired a Northridge, California Taco Bell property directly from the Taco Bell founder, Glenn Bell. Their goal and their vision from the very beginning was simple: create a platform that provided shareholders monthly dividends that increase over time. And their unique approach was to purchase commercial real estate and lease each property to well-qualified companies with a strong financial profile in exchange for capital. Fast forward to 1994, where Realty Income began trading on the New York Stock Exchange. So what does the business look like today? They own over 11,700 commercial properties, a portfolio occupancy rate of 98.9%, 1,100 different clients, and spread across 79 separate industries. Here's a breakdown of their top 10 industries. This is one of the things I love about Realty Income. Their focus on properties that the average Joe uses on a daily basis. And this is further evidenced by their top 20 clients. We've got Dollar General at 4.2%, Walgreens at 3.9%, 7-Eleven 3.8%, Dollar Tree 3.5%, CVS Pharmacy, Walmart, Home Depot, Kroger. We know that economies are cyclical, but the reality is these types of businesses, Dollar General, Walgreens, 7-Eleven, Dollar Tree, Home Depot, Kroger, Walmart, these businesses thrive in good times and bad. And while their businesses are heavily skewed retail as opposed to industrial or agricultural, the types of retail businesses do matter. You'll also notice that while they do have properties in all 50 states, there are a heavier concentration of properties in Texas at 11.1%, the United Kingdom at 9%, California at 6%, Illinois and Florida at 5.2%, Ohio at 4.5%, and Georgia at 3.6%. Look at this historical record of portfolio occupancy. This is what you call stable real estate income. During the dot-com bubble, held strong at over 97%. During the housing crisis, never dropped below 96.8, 96.6%. I can't find a better representation of stable income. Okay, let's talk about the important dividend metrics we need to understand. Remember that dividend growth is one of the most important things we talk about when it comes to dividend stocks because it is the most effective way for us as investors to combat the effects of inflation. We can see here the 1, 3, 5, and 10-year growth rates for Realty Income are 3.7%, 2.9%, 3.3%, and 5.3%. And while these numbers do just barely offset the effects of long-term inflation, which run generally between 2 and 3%, it does not do a great job of offsetting the amount of inflation we are feeling right now. With a price per share of $64.08 per share currently, the dividend yield is 4.6% compared to its historical 5-year average dividend yield of 4.43%, which means that Realty Income is actually trading at a 5% discount relative to its historical dividend yield. Even if you can't increase that with option income, and we technically can with Realty Income, a yield of 4.64% is great. All right, dividend safety. Remember, when we talk about dividend safety, we're talking about the payout ratio, specifically dividends paid divided by free cash flow as opposed to net income, because dividends are paid with cash, not net income. Now, on its face here, when we look at this, we see a payout ratio of 87% for the 2021 year, and then for the trailing 12 months, we're at 76%. And you might think right off the bat, these are not great numbers. And when we think about this within the context of all the other properties we look at, I would agree with you. But one thing we have to remember is that Realty Income is a real estate investment trust, and this is a special tax classification. Real estate investment trusts are able to bypass corporate taxation as long as they meet certain requirements, including the biggest one, which is that they must distribute at least 90% of their taxable income to shareholders every single year. What this means is higher dividend yields, but as a byproduct of this rule, also they're going to have higher dividend payout ratios. As long as we are not touching 95, 100, and over 100% based on our free cash flow, or even worse, we don't have any free cash flow at all, then this is not a problem for us. And we can take a closer look at historical free cash flow. We're here on the Morningstar website where we get a really great view of historical free cash flow. And you'll notice back from 2012 all the way through the trailing 12 months here in 2022, that Realty Income has very stable free cash flow per share. And it's consistently increasing year over year. Let's take a look at the historical price growth for Realty Income, because it's all great and dandy to have a really high dividend yield, but what does the overall price appreciation have to do with Realty Income? Year to date, the company was at $71.92 back at the beginning of the year, and we're down to $64. But this tracks with the types of declines we've seen across the market. If we look at our 2-year history, we have price growth. We were originally at $57.94 and we're up to $64 right now. If we look at a 5-year history going back to December of 2017, we were at $53.63 per share and we're at $64 now. And between now and then, we had quite a buildup up until COVID, where we had a significant drop, as you can see right here, and then we've gone steadily up since then. If we go 10 years out, we can see back in December of 2012, we were at $39.71 per share, and we've grown quite a bit since then. So what you get with Realty Income is a consistent and growing dividend, and you also get appreciation in the price per share as well. So does Realty Income have any opportunities for selling covered calls? The answer to that is yes, but it's not quite as lucrative as we've seen in previous examples. One of the reasons why is Realty Income only offers monthly options that expire each month on the 3rd Friday. And the reality is Realty Income does not have a lot of volatility in its stock price, which is stable and something that most investors actually desire. We're kind of in between expirations, so it's tough to get a good measure because December is going to be expiring in 7 days, but January is not expiring for 42 days. Let's look here at the option expiring January 20th of 2023. We've got our at the money right here at 64, which is in between 62.50 and 65. We could come out here to a 67.50 strike price, which has a delta of 0.226, which would net us approximately, we'll go right in between here, 55 cents per share for the option. If we sold that option, we would get 0.55 per share. And let's say we could do this 9 times a year, okay? Because since we're at 42 days, we'll go 9 times. We'll multiply 0.55 times 9, which means that annually we would get $4.95 per share from option income. We can see our annual dividend right here is $2.98 per share. So we can add to the $4.95 plus 2.98 per share, which means total cash flow would be $7.93 per share, for which we could then divide that by our current price, $64.06, which would lead to annual cash flow of approximately 12.37%. This is just under 3xing our portfolio cash flow just from this one investment. We're going from a yield of 4.6% to now over 12%. Okay, so the important question here, does Realty Income deserve a spot in your own portfolio? And the answer to this for me is yes, in most cases. It's a real estate company, and it's difficult to get real estate exposure in your portfolio that has consistent and stable price appreciation, along with a growing dividend. And the truth is, it's difficult to get Realty Income exposure in an ETF, because most of the ETFs that hold Realty Income are real estate investment trust ETFs. And I don't think it's necessarily critical that we own some sort of a REIT ETF. Now, the downside to holding a real estate investment trust in any type of portfolio except for a retirement account is that it's fully taxable. You don't get the type of qualified dividends that you normally would get with a regular dividend stock. So as a result, if we're going to hold Realty Income in our portfolio, it's best done in a retirement account where you're not being taxed on an annual basis. In fact, it's really hard to come up with a scenario where Realty Income is a bad stock to own in your portfolio. It's great for young investors, it's great for older investors, a great way to get real estate exposure in your portfolio. Make sure to leave your 2 cents in the comments below. I value all your feedback and I respond to every single comment I get on the day I post a video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.